Hello and welcome back to GoldStockTrades.com. Today we have a special guest with us, Paul Matysek. Paul Matysek has just come on as CEO of GLDX Mining, which can be traded as GLDX on the TSX Venture. Mr. Matysek has over 40 years of experience. He sold 5 publicly traded companies worth over $2 billion. Thanks, Paul, for taking time. I know it's a crazy time with the coronavirus pandemic, but I really appreciate you taking a few minutes to speak to me and educate my group and my followers about your career and about what's going on at GLDX Mining.
Oh, thank you very much.
Paul, let's talk about your career first. First of all, how are you doing, and where are you located, and how are you dealing with this? Is you and your family okay?
Yes, well, thanks for that. Yes, I'm ensconced with my wife. I own a place in Whistler, British Columbia. It's a resort town just about 90 kilometers north of Vancouver. It's totally empty. This would be usually the most busiest time of the year after March break. There's nice fresh snow on the mountain, but the resort is empty. You could throw a bowling ball down the middle of the village square there, and you wouldn't hit anybody for days. So it's quite unusual. I believe we'll go through that. I find that British Columbians and Whistlerites and Vancouverites are taking this pandemic seriously. They're practicing a lot of social distancing. We just have essential services open, drugstores and grocery stores, and of course liquor stores, and we all seem to be surviving. And it's strange in a world where hugs and kisses are weapons, and not visiting your family and friends is an act of love. So that's kind of going to have profound effects, I believe, in the future of how we do things. So. And all those things that, the impacts of that, what we're doing right now, will obviously, I think, have a big impact on the price of gold.
Well, thanks for taking the time with us. I know it's a crazy time. But first of all, let's talk about your background. So my investors that are seeing this understand you started off as a geologist, geochemist, a scientist. But then you made a transition into running companies as a CEO or an executive chairman, and you've been able to sell successfully 5 major companies in aggregate worth over $2 billion. How do you make that transition from being a scientist to an entrepreneur? And what do you recommend to aspiring entrepreneurs or scientists, aspiring entrepreneurs in today's volatile time that we're seeing now with this pandemic?
Oh, well, I mean, I've always been an entrepreneur from a very young age, and most of my experiences were just to become better technically as a geologist, as a geochemist. I worked for a big company called Anaconda, and I was part of their acquisitions team. So I got a sense of how to look and assess mining deposits that major companies would use. I ran a research institute with like 15 PhDs, and so I learned the power, the knowledge that you need, on moving projects forward. And I really learned about the devil's in the details. And so I guess in my mid-40s, I learned about the stock market. I learned about, becoming from being a geologist to try to enter into the C-suite and try to use all the skills I amassed as being, a geologist, a guy that runs programs and drilling and provides advice on acquisitions. And, I decided to take my first foray, and I've always been following metal prices, and I'm pretty attuned to what the world events are. And, so my first foray was into uranium, and uranium was trading at $10 a pound. That's I think in 2004. So that's when my journey began of selling those 5 companies. And I thought, what are the essential components of making a successful junior mining company? And I thought, well, it'd be nice to have a great value-added asset, a rising metal price, and a team that executes. So that is the fundamental success parameters that I've applied. And so I worked with a good partner, Bill Sheriff, and he had a database of known uranium assets, and so it's $10, market cap of $5 million. We branded it as Energy Metals, and I think we were one of the first people to look at that. And the market wanted like uranium, and we wanted pounds in the ground. So, we decided that we had our own inventory of uranium deposits, but we thought that wasn't enough, especially in the rising uranium price. So I don't think anybody's done this, but we took over 3 public companies in the space of a year, and the stock just kept going higher. The price of uranium went higher, and fast forward a year, we've got a staff of 50. We're looking at developing some assets. Fast forward, our stock is now $6, $7 a share. Fast forward another year, we are on the New York Stock Exchange, and I ring the bell as a CEO, and we're Canada's fastest growing company. And the price of uranium's gone from $10 to $60 in that period. And then in the last year, the price of uranium went for $100, $105. And we're talking, making offtake arrangements, and we're talking to large major companies. And I had a feeling that $100 is a little high, and I thought it was time to actually exit. And one of the key things about sort of my marketing approach is that I just buy stock. When I make a commitment to the company, I never sell any shares. So I'm sort of the last shareholder standing. And so I thought the environment was ready to sell. I thought the uranium was overpriced, and so I managed to sell that first deal to Uranium One for like $1.6 billion. Okay, or like $1.2 billion. I mean, you don't know exactly it. And the stock was trading $19. And but I made a commitment as part of the deal to the shareholders that I wouldn't sell my position for 1 year. Okay, so and in that 1 year, the price of uranium went from $100 to $40, and the equivalent value of that stock that was at $19 went down to $4. So I did an incredible thing for those shareholders, and so I was a little depressed after that, and I thought, geez, if I did it once, I could do it again. And so December, and I looked at the potash space, and the potash space, I thought, geez, it's trading $100 to $200 a ton. There's a lot of interest by China to actually acquire these potash assets. So I formed a company called Potash One, and I drilled 3 holes in the Saudi Arabia potash, which is in Saskatchewan. I found a large resource. I don't know if you're familiar with Robert Friedland. He phoned me up and asked me if he could be my chairman. He would help me with transitioning the company to China. And so we raised, and I said, sure, let's come on board. So we raised $40 million. We went from PEA, pre-feasibility, to feasibility study. I got the mining permit. I had an excellent technical team, and the price of potash went from $10 to almost $850, $900. Again, I thought that this was the time to sell. Along the way, I always talked to potential buyers, and there was some tension with a number of companies. And at the end of the day, one of the oldest potash producing companies in the world, German company, K+S, they purchased the company for cash this time for like $434 million. And again, PotashOne started as a $5 million company. In the space of 3 years, that happened. And then K plus S spent over $3 billion to put the legacy mine into production, and that was a producing mine in Saskatchewan. So that type of approach, I did 3 more times. 1 in gold in Argentina, heap leach deposit, and 2 in lithium in Argentina. I was trying to be early. I was trying to find a great asset, and knowing when to sell or when to develop. The last deal we did was Lithium X, and that was an 18-month trip from 15 cents to a sale of 285, and so it had it had very, very, it was a very good system that I now got in place, and which brings me to GLDX. So I feel like a lot of other pundits out there in the world that with this incredible amount of dollars that are being pumped in by governments, that it's causing an inflation, and the lack of we're being restricted in working. So the lack of goods and services, we're stagnating our economies, and that leads to stagflation. And if you look in the past, that stagflation often causes people's flights to gold and increased demand for gold. So I think this moment is upon us, and I think that there's a lot of torque in the price of gold that will happen. I don't know what number. I'm not an economist. I'm just a general theorist. But I think it would go to 2,000 before it goes back to 1,200. There'll be a lot of volatility along the way. So I thought, geez, I should really get back into the gold business. And obviously, in most things in life, size matters, and ability to actually look at a situation and see if you can add value to it. So I looked at Sandspring Resources, and it had an asset that's 7.35 million ounces of measured and indicated. It had a lot of upside and inferred of 3.15 million ounces, which is a lot of potential for growth. And it did a PEA study in 2019 that looked like this. I can go into detail, but looked like it had a torque on gold prices. It's leveraged to gold. So I became a strategic advisor for the group, and I made a couple of recommendations. And one was to rebrand it to the name from Sandspring to GLDX. We looked at consolidating the shares from 8 to 1. So we had like a 30 million share float. So I usually use that. So if we want to try to raise money, it's a lot of a higher multiple with less dilution. And then we made a debenture, a $20 million debenture to own the property 100%. And so after all those things were done, I thought, and the price of gold was flirting back down to 1,400. I thought, oh, this is the time to get in, because I think that gold's going to go on a run, and that if I had control of this asset, that I would do the appropriate trade-off studies, look at feasibility studies, look at either expanding the resource, look at M&A activities to unlock the value of Toroparu. So last Wednesday, I joined as a CEO and became CEO on the board and chairman of the board. We reduced the number of board members so that we streamlined it so that we can make quick decisions. And here we are. We've got some great shareholders. Grand Colombian, a great gold company in its own right, is like a 20% shareholder and a supporter of the vision that I've set out for it. Frank Juicero owns 10%. some of the associates buy piece, but I own like 10%. Okay, me and myself now I own probably with my family and associates own close to 10%. So you're looking at almost 50% of the company owned by people that are going to make their money by share price, and that's the key. Um, so I'm quite excited about joining the board and looking at how to, unlock the value of Toro project and try to be part of the, be part of the ride that a rising gold price will give. Just to give you a sense of the leverage to the gold price, and I recommend to all your listeners to look at the PEA and look at our website. This is just released in June of 2019, and at the base case scenario at $1,300 gold, we have an NPV of $495 million, an internal rate of return of over 20%, a payback at within 2.9 years, and a free cash flow from $1.25 billion. This is a production of almost between 175 to 250,000 ounces. Okay, and I'll come back to that later. Now, at $1,500 gold, we have an NPV of $760 million, an internal rate of 27%, a payback of 2 years, and a free cash flow of $1.71 billion. Okay, so that's at 1,500. I think we're trading at 1,648. So we're north of 30% of an IRR. So, so that's great for a couple of reasons. So the larger the IRR, will give us, and the higher the gold price, they'll put torque on this project. And because we're such a large project in terms of the amount of ounces we can produce, and by the way, we have a precious metal agreement with Precious Wheaton Metals for $135 for any financing on our of the project. And the first phase is a two-phase development. The first phase is about $350 million, of which we have $125 million already called for. So we're off to the races in the developmental land. And in terms of potential acquisitions by mid-tier or top-tier gold mining companies, what are they looking for? They're looking for a company with size and ounces, with a production profile of 5 million ounces in an English-speaking country, some open pit, that type of, that can produce between 175 to 250,000 ounces. That will make an impact on their books. So it becomes a very attractive asset to them, And so one of my jobs would be to show those economics around that. So anyways, that's a mouthful. I hope that gives you a sense of
yes, I think it's really important for my viewers to understand that there's very few people in the mining industry that have track records, not only of doubles or triples, but in some cases a 100-bagger. And you've done this time and time again. You have exceptional knack of timing the market, understanding the commodity. It's very significant that you've come on as CEO and investing in this private placement. You can get more information on GLDX Mining by going to their website at goldxmining.com. It's traded as GLDX on the TSX Venture and as SSPXF on the OTCQX. New appointment, top gold asset in South America. Paul, is there anything else that you'd like to conclude with before we end the interview?
Well, I'm, just looking at just some sort of factors how you can evaluate gold companies. Like if you look at the market cap of our company, which is about maybe $60 million to have 7 million ounces of M&I on a market cap to resource ounce, it's like $7. Okay, $7 an ounce. So it's really, like deep discount value. And And we'll be putting on our website, we'll be putting some ways for your clients to look at where we stand with our peer groups on a different valuation matrices. Okay, so go ahead and take a look at that. That should be up by early next week, and you'll see, how to look at gold companies and what kind of different ratios you can look to evaluate them. So no, I really enjoyed talking to you.
And Paul, you mentioned about Paul before we end. You mentioned about the gold in the ground and what it's valued at. I'm speaking to a lot of money managers, and they can't find the physical metal right now. And I'm wondering if now is the time that investors are going to finally come back into the miners so that they can get access to this physical metal in the ground.
Yeah, no, I think this will be, the gold market industry in general is being through like they've consolidated, and they've spent a lot of time and energy rationalizing their assets. So I think this is a good time. It'll be a good run for not just GLDX, but many other gold companies, because it's an asset that people tend to go for, a hard asset, when times are tough. And I think we've got a boatload of hurt still coming until we're back in the sunshine.
Mr. Paul Matysek, CEO of GLDX Mining, to be traded as GLDX on the TSX Venture and as SSPXF. Thank you so much for taking the time, and for, especially during these volatile times and during this pandemic, thank you so much for taking the time away from your family to talk to shareholders and to let them know how special GLDX Mining is.
Yep. Thank you.